The June quarter was the worst quarter for the entire construction sector and also companies in our coverage which had suffered close to 45% year-on-year drop in the revenues. However, things have improved quite subsequently. If you see major issues such as labor, availability of material and also equipment at most of the sites has also resumed. In our ideas for profit today, we'll discuss our high conviction stock ideas and also the companies like PNC Infratech, also KNR Construction, AG Infratech, all of which have actually demonstrated strong execution in the past and have also got a strong balance sheet and working capital management, and there is a remarkable difference in performance as well from the past. Now, there are clear indications that the worst forced by the lockdown period seems to be quite over for now for most of the construction companies, and also that there are indications of good growth in the next 2 quarters as well. Now, it is quite possible that the companies with a strong execution track record and also balance sheet should definitely witness little or no damage at all as far as the growth is concerned in this fiscal year. Now, despite the 37% quarter-on-quarter increase in the revenues, the companies in our coverage have actually were able to keep their total cost as a percentage of revenue at 80.4%, a level that was seen back in the June quarter. Now, during the March 2020 quarter, the overall operating profit margins of the companies had actually dipped to a low of 17.7%. Now, it has actually recovered to the pre-COVID levels as well. If you see in this quarter, even in the difficult times, these companies have actually maintained their debt to equity at less than 0.5 times. That's a big positive, and the working capital has also seen improvement. Now, KNR Construction, when we talk about that has seen its working capital dropping from 78 days in March quarter to 58 days by the end of the September quarter. Now, companies have also conserved the cash and have also taken advantage of the low interest rates in terms of monetizing assets and also refinancing. Now, PNC Infratech, the leading EPC player, also indicated that the labor availability has really improved to about 90% of the pre-COVID levels. And that is in the second half of the September quarter really. Now, it further said that by November 2020, the availability could actually reach to about 100%. Also, when you talk about IRB Infrastructures, which is one of the largest players in this space, that has seen about a 40% quarter-on-quarter improvement in toll. Moreover, IRB's per day collections that had dipped to mere 1.4 crore rupees is gradually improving to 3.26 crore rupees in June and 4.33 crore rupees by the end of September 2020. Now, the stress pertaining to these projects in terms of viability, servicing, financial obligations, they're all no longer a major worry for these companies. Execution, which was seen as a big challenge in the last 2 quarters, if that also starts to pick up with the issues now on the ground pertaining to labor and equipments and also capital really easing out, we could definitely see sustainable recovery in the next 2 quarters, that is, and a very strong growth in the next financial year. Now, the good news is that most of the companies that are actually sitting on a strong order book as well, that is over 3 times their annual revenue, which could actually support in reviving the growth that was really impacted by COVID-19. That's definitely offering a strong revenue visibility from here onwards. Now, Moneycontrol researchers' focus list and the high conviction ideas of, say, PNC Infratech, KNR Construction, AG Infra, they all continue to remain in the buy zone. Now, despite the kind of share prices which have seen a recovery from the lows in March, considering that they still trade at attractive valuations, also they offer highest revenue visibility, lowest financial leverage, best execution track record, and definitely have a strong balance sheet, they all make them worthy of consideration for the long term.